Alrighty guys, so I wanted to jump on and really talk to you guys about Tesla stock here. So Tesla stock has had an amazing year, up 650%, and it feels like this stock is forming new highs almost every single day. And as a growth and a value investor, or really just an educated investor, you understand that you should never be buying when these stocks are forming new highs. But there's a couple strategies that you guys can use to honestly really dominate this stock here. So let's talk about the very first one. This is going to be one that really is buying on a support line, just a one lump sum investment, whatever you guys want to do, and honestly just hold it for the long term. But you don't want to buy it at these highs here. The reason why is because this could be an overvalued point for this stock here. Yes, it does have an upward trend, and if you guys are a long-term investor and you don't want to, and you don't care about the day-to-day volatility, then buy it. But if you guys are an educated investor, you could understand that this stock could be temporary overvalued. So let's break that down. So you guys can see that looking at the RSI, which is the relative strength index, this is a momentum indicator, really tells when a stock is overvalued. You guys can see that right in here, we did get some sell-off. Boom, right in here, we did get some sell-off here. So anytime it's really in this red, we do get some sell-off, okay? You guys can see even in here, we did get some sell-off. So now as it's crossing into that overvalued point on the RSI, and it is forming some new highs, this is a clear indicator that this stock may temporarily be overvalued. So what is a good strategy to do? So what I do is I like to find support and resistance. So when a stock forms a new high, that is a new resistance. That's going to be a very, very hard point for this stock to break above. The next thing you guys want to do is find some support. So this is going to be an entry that you guys are going to get into. So it looks like there is some new support here at around the $675 mark. The reason why I say that is because you guys can see, yes, it did hit that right in here, and we did get a little break above it, but major sell-off. And then look at this, it taps it in here, sell-off, okay? And then we did hit that resistant breakout right in there. So me personally, I think a perfect entry would be right around and under 700. I have my alert set at 675, but you could even raise it to, just under 700. I think that's a very, very strong entry. Now, the reason why this is such a good entry is because you're not going to be getting in on these high price points at $730. You're going to be getting in on $700. But the risk that you play when you guys want to try to time the market is you could be missing out on future gains. So is there a better strategy that still has, that long-term possibility, that has very, very low risk, high reward? Well, yes. The strategy that I use and I recommend is a strategy called dollar cost averaging. So really what you do is you figure out how much you want to invest. So if let's say you want to invest, let's just say $2,000, $5,000, whatever that is. Let's just use $1,000 as an example. So you would invest $1,000, but you're not going to be putting that $1,000 all up at once. You're going to be maybe investing $100 per week over the next 10 weeks. So what that does is it gets a good average price for that 10-week period. So if let's say you guys bought in here, this could have been an overvalued point for the stock here. But then you guys bought it down in here and then bought it in here. So now your average price is right at $550 or $78. So once it recovers, you have a bigger ROI. And a very, very similar thing could be happening right in here. So you still get in at 732. As it falls, you just buy more, average your price down. So the beauty of this is you're not going to be missing out in any short-term, movement. So if it goes up to, let's just say 800, you still have some shares, so you still are making money. And if let's say it falls down to, $680, all you're going to do is just average your price down. So, and a little twist that I do is anytime a stock or ETF really falls over 6.5%, double what you normally would put in, especially for a lot of these high growth stocks. You guys will not regret it. And you're just moving your average price down. And this is a perfect strategy to really eliminate volatility, have a huge upside potential, very, very little downside with little to no risk. So that is really the main strategy that I use for Tesla. I did get in over a year ago. I did invest around $10,000, and I've been just averaging my price in as this stock has gone up or down. So it's a beautiful way to invest. So I hope you guys enjoyed the episode, and if you did, hit that like button, and we'll see you guys tomorrow. Take care, guys. Just a little quick episode, really breaking down some charting here. I hope you guys enjoyed it.